Hey guys, Eric here, Mr. Fired Up Wealth. Today I'm going to cover 3 SPACs that I'm holding long-term in my long-term growth portfolio. Now, SPACs can be a great way for a company to go public. There are pros and cons to IPOs and to SPACs. Most of the time for me personally, and everybody's different, you got to do what's best for you. I put my SPACs in my speculative bucket. If you're not familiar with how I invest in specs, subscribe to the channel, check out some of the videos on the channel. But I generally invest a percentage of my portfolio in speculative to help with growth. And these are 3 really good SPACs that I think are high quality. They definitely have risk reward. They are somewhat speculative, especially at the current prices, but I do like these long term. I think all 3 of these stocks can be good additions to a portfolio if you manage the risk properly. So without further ado, let's get started. So first, Opendoor. Now I did a video on Opendoor, I don't know, probably the end of 2020, said it was probably going to be a buy and a long-term hold. There has been, some information since then, some earnings, and I wanted to just bring this one to you again. So the first stock I'm going to cover today is Opendoor. The ticker is OPEN. And this is from their website, their story, to give you a background if you're not familiar with what they do. The reimagined way to buy and sell your home. Opendoor is a leading digital platform for residential real estate. So you think of like Zillow Group, Redfin, these guys are trying to compete in that space. In 2014, we set out to reinvent life's most important transaction with a new, radically simple way to buy and sell your home. We have rebuilt the entire consumer real estate experience and have made buying and selling possible on a mobile device. This is disruptive technology. It's the future. Young people like to use apps, like to buy things online, have an internet experience, and I like the company for that reason. Check out that other video, and it tells you some more background about Opendoor. But they say here, we've served tens of thousands of customers who have come to Opendoor to make their moves easier, whether it's getting married, start a family, et cetera, et cetera, et cetera. Opendoor currently operates in a number of growing cities and neighborhoods. I'll cover more of this in a second of where they want to grow across the country. A full view of the markets we serve can be found here. You can click. Headquartered in San Francisco, they are San Francistic. We are a team of problem solvers, innovators, and operators building the largest, most trusted platform for residential real estate. Boom, Opendoor. Okay, why do I like Opendoor? Let's go through some stats, some reasons I like the company and the stock, and where I think the stock could be headed, okay? So during the last earnings call, if you're into earnings calls and you listen to those, you should be if you're an investor. Opendoor said it plans to expand to 42 markets. That's twice of what it has now, including 6 new markets during the first quarter of the year of 2021. So that is I think that's exciting as an investor. And Open works with sellers, but additionally, Opendoor recently launched what they call a cash offer program that allows buyers to make cash offers backed by Opendoor. So this is a new thing that is kind of disruptive, even within the disruptive players in the space. We know the market is competitive, Wu said, that's the CEO. This feature and more to come demonstrates our ability to innovate quickly based on what we're seeing in the market. These guys are trying to be innovators. Asked during the call about Opendoor's competition with Zillow, the CEO, Wu, replied that he's focused on building a new sector. Hard to say what he means by that, but I thought it was interesting to share. So about the market. Okay, here's the opportunity. For me, this play is really about TAM, total addressable market. The real estate market is currently one of the hugest undisrupted markets in the world. Just the USA, the United States of America, is a $1.6 trillion market. That's trillion with a T. And the process of buying and selling properties hasn't changed much really in the past several decades. There's a tremendous opportunity for Opendoor, and the TAM is massive. So the largest undisrupted market in the US, it's talking down here below, used autos, you think of like Carvana, and there's other ones like Vroom. Food, you think Grubhub, DoorDash, Postmates, all those. Real estate, now you've got really Zillow, which I think Zillow is best of breed. Redfin is a great competitor, I think. Opendoor really needs to just be able to find a niche and be able to scoop up some of these crumbs in the total addressable market. And I generally don't like investing that way, but these guys, I do like the management. I like the opportunity. I think there's just a huge total addressable market, and I think there's room for all 3 of these companies to do well. So I do own Zillow. I think that's best of breed, and I have much larger position in Zillow. And I do have Opendoor in my portfolio at about 1% of the total portfolio value. And that's in my taxable brokerage, is about $1.5 million right now. was higher, and it's come back a little bit with the recent sell-off, but about $15,000 or so in Opendoor. And just to be transparent with you guys, so you know where I bought Opendoor, and I'll try to do this with all the stocks we're talking about today. Opendoor is one that I bought. It looks like my cost basis is $24. I said that 22 is a good buy, and I end up averaging up, and then the stock came back pretty hard. It sold off here recently, and then I added some shares lower. So I do have 700 shares at $24.01. It's 24.012 to be exact. And the value on it right now is just under $20,000. My cost basis is about $16,800. So this is a little bit over 1% of the portfolio, not quite 1.5%. And I like it long. I'm going to continue to hold it long. Okay, so is it the right timing? Now, there was a really good interview with Chamath. That's the CEO of Social Capital, if you're not familiar. And basically, I just want to go through these highlights. These are the reasons on CNBC that he was very bullish on Opendoor and why they chose Opendoor with IPOE, with Social Capital. So the first bullet, lack of resale inventory and new home expansion has constrained supply. He also mentioned increasing state taxes and elimination of SALT, that's state and local taxes, SALT deductions, are creating relocation decisions. In other words, people are moving from high tax states, especially where they can't use the state and local tax deductions, the SALT deductions, and that's causing people to move to different areas of the country. You also have people that are being able to work from anywhere, so they're able to relocate, keep the same income in a lot of cases, and actually live somewhere else. Working from home is accelerating everything. That's the next step. 75 million millennials are starting to enter the housing market. That's huge, right? Especially because when you think of like a Lemonade Insurance, the younger generations, millennials and younger, they like using apps. They like to not necessarily have to deal with somebody that's a salesperson trying to jam stuff down their throat. And this type of app provides that environment for these 75 million millennials. The Federal Reserve interest rate policy will keep near zero for a long time. We think at least a couple, 2-3 years. So that is a risk, of course, if interest rates start going higher. A stock like Opendoor could get hit from that. Okay, so in conclusion, Opendoor, and then we'll go to the next stock. So currently Open trades at about 3.1x forward 2021 sales. Might be a little different depending on when I researched it and what the stock is today, but roughly gives you an idea. Now Zillow and Redfin. So Zillow is the sales ratio, the forward price to sales ratio is about 6.5, and Redfin is 4.79. So Opendoor is expensive, but compared to its peers, it is less expensive, and for good reason, because Redfin and Zillow have a greater market share. They've proven themselves more, and they deserve a higher premium. Open has about a $13 billion market cap. Again, I did this research a little while back, so it could fluctuate slightly. My thoughts, Open probably grows at a revenue at about 50% annually over the next probably 2 to 4 years. I'll just say 3 years. And what that's going to give you is a market valuation probably between 18 and $27 billion. So if we're about 13 now, I think over the next 3 years, that can grow pretty substantially to 18 to 27 billion. And on a 3-year upside, I would say 100% stock price appreciation. So right now it's trading around 28. I'd say in 3 years, it's probably $60. It could certainly be more, but that's how I calculate it in my portfolio. So, it's not going to be necessarily one that's going to give you a 400% return. It could, but I think for me, this is my expectation. And a lot of times I'm very conservative. So this is kind of the minimum I'm hoping, is basically that the stock is going to increase about 30% every year for the next 3 years. And I'm going to double my money. Obviously if it can do better than that, the more gains, the better. I'm okay with that, right? So that's kind of the minimum I'm expecting from a stock like Opendoor, and hopefully it's much higher than that. Up next, DraftKings. So number 2 is DraftKings. What is DraftKings? In case you're not familiar with DraftKings, It's a leading skill-based daily fantasy sports gaming destination for fans in North America and the UK to compete in single-day online games for cash and prizes across the largest variety of professional sports. DraftKings is the exclusive DFS partner for Major League Baseball, National Hockey League, Major League Soccer, NASCAR, Ultimate Fighting Championship, founded in 2012 by CEO Jason Robbins, et cetera, headquartered in Boston, Massachusetts. So boom, that's what DraftKings is. And just in case you've never heard of it, and why do I like the stock? Why do I like this SPAC? Well, 75% of the US population is currently untapped when you think of sports gambling, sports betting. That means only 25% of the population can actually use the app right now. So to me, that's a tremendous opportunity ahead. And that's just the US population, not including international opportunity. States need tax revenues after the pandemic. A lot of states are hurting. They need that tax revenue. They're also, a lot of states like New York are losing residents that are moving to other states with less taxes. And so they've even talked about doing a casino, downtown New York. But nonetheless, states need tax revenues, which makes it easier to legalize things like, the sports gaming. So pent up demand for sports. There wasn't a ton of sports last year. There weren't a lot of fans at the games. A lot of games were, canceled. Some sports happened, some didn't. It just wasn't the same though. And there's still a huge pent up demand for anything sports. In 2020, it was like you would watch almost anything that was live sports. For a while there, we didn't have a lot. And there's still that pent up demand for sports. Now, Penn National Gaming just announced today that they're going to be heading into the S&P 500. Now, of course, I like that stock as well, but I think that bodes well for DraftKings. If Penn National Gaming can go into the S&P 500, I think the potential there is there for gaming. It shows you that, Wall Street is taking these companies as credible companies if they're going to actually get them into the S&P 500. You remember Tesla? It was kind of controversial, like, is Tesla going to get in the S&P 500, et cetera. The fact that Penn National Gaming is going to the S&P 500, I think is huge for the industry as a whole. And I think it's good for stocks like DraftKings, like Penn National Gaming, even Skills. Like all three of those, I think have room, just like on the last slide, we talked about Opendoor, Redfin and Zillow. Same kind of deal here. I think there's room. There's enough total addressable market for several competitors to do well. Now, these guys, DraftKings, have direct agreements with the biggest names in sports, and it really cements their leadership in the space, in my opinion. ESPN, Turner Sports, and PGA. That's golf, if you're not familiar with PGA. That really proves to me that they're the leader in sports betting. I like Penn National Gaming, but I think DraftKings, that's kind of the household name for most people. That's what most people know. And most people that use DraftKings really like it. They also have a lot of AI that make it kind of addictive, which is bad in some ways. But as an investor, people that use the app tend to come back and come back and come back. And they have some really interesting machine learning and algorithms and AI that will put certain games in front of certain people because they know those people are going to be attracted to them. And so their AI is good and it's helping the company grow. Okay, so what else? So DraftKings reported $322 million of revenue in the last quarter of this Q4, growing by 146% year over year. It's impressive growth. Now, they did note that the organic growth would have been 98% without the acquisitions, but Wall Street was still only expecting, they were estimating $232 million in Q4 revenue or 77% growth, and they knocked it out of the park. They gave us 98% organic out of the 146% with the expectation of 77%. So this is pretty bullish for the stock and for the company. The stock has made a massive run up. It's one of the largest beats in the tech sector. Actually, for this last quarter, it was a pretty, and this is technology, but it's also kind of, a niche technology type play because of the space it's in. So I do like this a lot. It diversifies my portfolio a little bit, and it's one that I'm continuing to hold long. I did buy this one. It's expensive now. I bought it and I've been buying it along the way, but I have purchase price, in the 30s, and we were buying it in Discord, back in the 35 or less was kind of the target. And we've been buying that a couple of times. Now I've got 300 shares of DraftKings, a little under $40 per share. So they're valued right now at about $21,300, and my cost basis is about $12,000. So I am up 75% on my position. It is, not quite 2%. $1.5 million portfolio. So this is closer to like, say, the 1.5% range on the portfolio. So it is expensive. It's trading right now at $71 a share. I'm not necessarily saying go out and buy it. They just had a dilution today as well. And the stock has actually held up pretty well. But they essentially did another, share issuance, and they continue to do that, and it's diluting shareholders. The stock was down this morning to 68, and it's bounced back. It's trading about $71. It's only down about 1% right now. So it is expensive. If it were to dip, I think it'd be an opportunity to add. It has about a $24 billion market cap or so. It's a little bit higher than that now. 21.9x is the F121 revenue multiple. So that is pretty expensive, 22x. And then CEO Jason Robbins on the Q4 earnings call. Here's a couple quotes. I want to read this to you. DraftKings is now live with online sports betting in 12 states, which is more than any other operator. These 12 states collectively represent 25% of the U.S. population I mentioned earlier. 6 states representing 11% of the U.S. population have legalized some form of iGaming. DraftKings is live in 4 of these states, representing approximately 10% of the U.S. population. The outlook for further legalization is also very promising. So far in 2021, 19 state legislatures have introduced legislation to legalize online sports betting. 5 state legislatures have introduced legislation to expand their existing sports wagering framework, and 1 state legislature has introduced legislation to legalize sports betting limited to retail locations. In addition, 4 states have introduced iGaming legislation, and 2 states have introduced online poker legislation. Woo, that's awesome. So DraftKings, guys, I'm long. I think it's the number one. Zillow is best of breed when you think of, real estate apps. When I think of gaming apps, I think of DraftKings. I also like the ETF bets. I was the first one, I think, to bring that to YouTube, and it's gone up, a lot since the video. But the ticker is BETZ, and you can check that video out on the channel. Do subscribe if you like these kinds of picks, because this is what I'm trying to find. I'm trying to find these early before they run. So DraftKings, we were buying a long time ago. I started buying it originally, well under $20, and added to my position and have a nice position up 75% and feel real good about that stock long term. What else? So SOFI, number 3, you guys have been waiting for this one, IPOE. If you watch the Fired Up Wealth acronym portfolio, it is the I and the fired. And I want to just read to you what these guys are about. Their number one goal is helping members get their money right. And I always think of Kanye West, wait till I get my money right. I feel like they copied that from him. I don't know. SOFI's mission is to help people reach financial independence to realize their ambitions. Hey, I'm trying to help you reach financial independence too. This fits right into the genre here. So, and financial independence just doesn't mean being rich. It means getting to a point where your money works for the life you want to live. This is what Fired Up Wealth is all about, guys. Everything we do is geared towards helping our members get their money right. Wait till I get my money right. We're constantly innovating and building ways to give our members what they need to make that happen. This sounds pretty good. I probably should invest in these guys. Actually, I have. I'll tell you what I have here in a minute in terms of shares. IPOE SOFI. So they really are structured around 3 segments. Let's cover this first. Lending technology platform. It's called Galileo, which I'll get to later, and then financial services. Its lending arm is basically 83% of estimated 2021 fiscal year revenue, and this deals with personal, home, and private student loans. So these guys do everything you can think of for money. They have crypto. They've got, you can buy and sell stocks. In fact, when Robinhood was going through some of the drama, Chamath was on, Twitter saying, "Hey guys, just get rid of Robinhood and, go download SOFI." By the way, IPOE is, is under Social Capital. I thought that was pretty funny. But SOFI recently signed a definitive agreement to go public with Chamath's SPAC, and basically the value of the company is around $8.65 billion with that. The market cap of $21 billion with 865 million shares outstanding when the deal closes. So the market cap will be $21 billion with the 865 million shares outstanding when the deal closes. This actually has not closed. When it does close, the ticker is going to change from IPOE to something else. And this is huge. This stadium, you can kind of see in the background. SOFI Stadium, this thing is massive. It's kind of unfortunate because with the whole pandemic, there wasn't any fans there. But I think this coming football season, you're going to see this thing filled, and it's going to be real big for SoFi's brand. This is SoFi Stadium. It's the home of the Los Angeles Rams and the Chargers. And SoFi is paying $30 million annually over 20 years. That's a long time. And you think that's in LA, has, huge population, 70,000 seat stadium. It's going to host the 2022 Super Bowl, so next year's Super Bowl. And also in 2028, the Olympics are going to have their opening and closing ceremony at SoFi Stadium. That's huge name recognition with stuff like that. The company has a $200 million annual marketing budget. So 30 million is not really that much. It's 15%. I think that's, it's obviously a lot of money, but considering it's not even blowing their entire marketing budget, I like that a lot. 15% of it. I think this SoFi Stadium can be really big for making them kind of a household name. And this is a picture. I mean, look at how beautiful that thing is. That thing's awesome. So SoFi Stadium in Los Angeles, very expensive stadium. That's kind of the new thing with these stadiums. They're multi-billion-dollar stadiums. So here we go. So multi-product members, they want to go from 400K to 775K. So right now they're at 398,000. That's today. In 2021, estimated they want to go to 775K. That's a 95% year-over-year growth. That's pretty impressive growth. They also have, strong forward revenue visibility, and they have a path to positive EBITDA. So that's huge. They're on track to exceed 3 million members by 2021. So the end of this year, that's their goal. This would be an increase of 75% year over year, a full 100 basis points more than the 74% between FY19 and FY20. And you can see the growth. They want to go basically, all the way up here to 3,000. So that's 3 million year over year growth. And this is from their investor call deck, but definitely some huge numbers. And the call deck, actually, you should look through the call deck. I'll put it in the description below, but some of the numbers just almost seem too good to believe, and maybe they are. But so some of the opportunities. Number one, digital wallets. If you read ARK, their opportunity, they're saying it's something like $4.6 trillion in opportunity in these digital wallets. So that's big. Bank charter. So they currently resell 100% of all their loans. And if they get their own bank charter, it could increase their profitability by about 25% and their scale. So boom, March 14th, this just happened. Today is the 15th, and this is from March 14th. It says, SoFi is buying a bank. This just happened last week. The acquisition of Golden Pacific Bank Corp will speed up SoFi's application for a national bank charter. Hey, this is big. This is a good update here. This should help drive enhanced EBITDA gains in the years ahead. SoFi is becoming a bank with its $22.3 million acquisition of this Golden Pacific Bank Corp. Golden Pacific is a California-based community bank regulated by the Office of the Comptroller of the Currency and $150 million in assets, so decent size. The acquisition will be paid for in cash, and it builds on SoFi's current application to obtain a national bank charter with the OCC. On closing of the acquisition, the fintech company will switch its current bank application to a charge of control application. This should accelerate the timeline for SoFi's attainment of the national bank charter. So this is huge, guys. And it's probably part of the reason why the stock has started to do better. Before I forget, let me read to you what I've got for IPOE. Now, this one got hit really hard recently and got down, I think, below like $15, and I did add quite a bit. I have 800 shares, and I'm right around $17 a share. It's trading at about 19 a share right now. So I've got basically spot on 1%, or so, 15,000 and change on a $1.5 million portfolio. So it's about 1% of the portfolio, 800 shares. And I'm only up about 7% right now, but I'm holding this thing long. And it was, if you look at the high on it, it actually went up to $28. So it's $10 right now, from its high. Not saying it's going to go there anytime soon, but I think it will get back to that. I think there's a lot of opportunity for IPOE, even at these levels. Anything under 20 long-term, I think is attractive. Just my opinion. I'm not a financial advisor. I can't tell you what to buy or sell. Okay, so positioning for profitability. So the bank acquisition we were just talking about, fundamentally helps position SoFi for profitability by bringing its bank operations entirely in-house, since they're basically not in-house now. The company expects this move to allow it to operate more efficiently and potentially lead to a higher level of realized EBITDA in the coming years. And you can see the estimations there, 2021 at 42, and this is in millions. And look at the growth to 2025. I mean, that's massive. And you can see the dark blue is base case adjusted, and then the light blue is potential adjusted impact from the bank charter. So that's the light blue is how much that bank charter could actually impact their EBITDA, that's huge for us as investors. So what else? So you've got cross-selling opportunities because you can sell, bank loans, house loans. You can get into, their investments. So people do crypto. There's tons of cross-selling opportunity. These guys have their hands in really everything, anything money. And so I think there's a lot of opportunity to cross-sell. Galileo, could it be the AWS of fintech? I won't go into this too much, but they have this tech platform, and basically they want to kind of make it the Amazon Web Services of fintech. And so SoFi and Galileo together are better, and it accelerates SoFi's strategy. It drives faster innovation, offers bank loans, et cetera. So other companies can actually use this platform for fintech. And it's kind of an interesting, they acquired it, didn't really pay that much for it. And I think there's a lot of opportunity. So right now, the way I look at this is that it's an asset they own, and it could be a massive opportunity for growth and scale if they can make this kind of like their cash cow like Amazon does to AWS. So it says offer SoFi loans, brokerage, Lantern Marketplace, and new technology services to 50 million accounts via Galileo partners. So there's definitely some opportunity to grow that. And I think there's opportunities to grow in lots of different areas, including international. Right now, they do have a presence in Hong Kong, which I was surprised with my research to find, but they're mostly in the US. But imagine if they were able to expand that all across, different international countries. I mean, there's a lot of opportunity to expand. So I was surprised to see they have a presence in Hong Kong, to be honest with you, but I think that's great. And I think there's even more opportunity to expand internationally for SoFi. So I'm excited about SoFi IPOE. So there you have it, guys. My 3 SPACs, again, Opendoor, DraftKings, and SoFi. These are 3 SPACs I'm holding long. If this video was helpful, please give me a thumbs up, drop me a comment, subscribe to the channel, check out the other platforms. Thanks for watching. Have a great rest of your day. Take care.